Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 1.3% today. We did see Dow leading the market today. Dow is up more than 2%. Small caps, the Russell 2000 is up about 1.6, 1.7%. NASDAQ is pretty much flat, and the banks is also flat today. But it's good to see some of the laggers outperforming a little bit today and yesterday, initially yesterday. So Dow led the market today, small caps just right behind it, and then we got the S&P and the NASDAQ following behind. And so just key topics that we talked about yesterday, just few things we talked about yesterday. Obviously, we did see a abrupt sell-off, the last hour sell-off. I think it kind of shook many traders and investors, but as I've covered, as I've mentioned, as I've emphasized on the last night's video, that we want to objectify this, we want to look at things in an overall picture, not to get emotional on a daily fluctuations. I've also noted the fact that we've seen these kind of abrupt declines before. So, and that's the market, guys. I don't understand why, every decline that decline has to be the top. I don't understand that, because market doesn't go straight up. When it gets an uptrend, it goes up and down. And this market, without the volatility, without the shenanigans, without the up and down, gap up, gap down, abrupt sell-off, rallies, it's not market. If this market just does what everybody think it's going to do, it's not the market. This market is designed to fool most people most of the time. And so that's why not to be so focused on the day-to-day fluctuation, kind of understanding the overall picture, it really dramatically will help your trading. And this is something that I've been talking about pretty much throughout last several months here since the March lows. Anyway, so some of the things we talked about yesterday, I think the key point is the fact that we talked about yesterday that we are in the vicinity of higher low, right? We talked about that yesterday, and we are also in the vicinity of higher high, right? So basically that low is definitely higher than that low, and that low is definitely higher than this low, right? This high is definitely higher than this high, and this high is definitely higher than that highs, right? That's what we call an uptrend, higher lows and higher highs. We've been covering a lot about how, market has been in this base for about a month here, and we broke out, right? We also talked about yesterday, and with that breakout, the market is no longer in a sideways market anymore, right? We've covered this, and we also talked about this yesterday, right? We're no longer in a sideways market anymore, because the market is now cultivating higher high. That means we're in an uptrend. And when the market is in an uptrend, a lot of times it goes up, it comes down to cultivate higher low before going higher. It's never pretty, it's never perfect, right? It's always something, it's always going to make things tricky, but in a general sense, that's what the market does. And we also talked about the fact that on the video last night, that a lot of people jumped in bullish at open, because again, a lot of people are looking at these levels. Everyone can see this level about what level is that? About 316 level. And when we saw a gap up yesterday, so many people chased it, moved to the upside. A lot of times with the tight stops, and that tight stop got taken out, and there was domino effect happening. The panic selling occurred, because if everybody kind of chased long, even maybe the bears turned bullish at the top here, and soon as those stops gets taken out, then everybody start panicking and getting out of the position. And a lot of times, it's funny how this market works. Market is insidiously clever that it knows. It's just crazy how it knows. It knows when there are a lot of people chasing. Somehow, somebody just knows. I mean, there's nobody out there like seeing what we do. I mean, we've created this monster called stock market, right? Just somehow, some way, this market just knows how to punish the chasers And I really thought that's kind of what we talked about yesterday. I really thought that was what was going on, right? And you see how quickly, we're back at the level where we were pretty much yesterday, right? So let's try to figure out and dissect this thing with today's move and figure out, can we see a follow through going into tomorrow and this week. So first of all, I was watching towards the last hour today. I think a lot of people are probably looking at this level. Again, it's the same concept here. So what do you think? We saw that first, that's the first hour. We initially gapped down, it looks like, and then came down, tagged my midterm moving average. I given you this level yesterday, right? 312 and 309. I haven't moved that level yet. And you can see that it looks like we gapped down initially. We pulled back in the first hour, got near to my midterm moving average. We labeled this market yesterday what? Bullish in the midterm, and then neutral in the short term. And I think that was the right assessment, because initially we did gap down first hour, and then pretty much throughout the day we did rally. And then now, as of today, I do have to give it bullish sentiment, a bullish in the short term now. Bullish sentiment in the short term, bullish sentiment in the midterm, bullish sentiment long term going into tomorrow. But anyhow, so we did see that gap down, right? Yep, that was a gap down. Continued lower, hit that my midterm moving average. We got back up, and then we closed the hour positive. And then a second hour, we continue higher. Third hour, we kind of hung around there a little bit. Fourth hour, we came lower. That was a lunchtime. Came back, market got back up. Fifth hour and the last hour. And then I think last hour ramp, it was pretty strong, but it was struggling. I remember I was watching the last hour, and it was struggling pretty much throughout the last hour. As you can see, this thing came all the way back down to my short-term moving average there. And I think, again, the same concept here. I think everybody's looking at this level, right? People might even thinking that might be head and shoulder formation, right? And they probably perceive this level as resistance, right? So, it could have been a potential resistance, at least in the short micro term, because we did say micro term dip. And then this all happened once we broke out. Then the market just kept going higher. Again, probably people might be shorting here in that vicinity, and then just covering, right? Shorts getting squeezed, and then buyers jumping back in. Maybe they close out their longs here, right, in panic, and then maybe jumping back in. I'm not sure, but looks like that was a pivotal level right here. Right, it looks like that was a pivotal level. So that was a pivotal level, and also this was a pivotal level, right? This is no coincidence. So there's my midterm moving average, 312 support there. That was at 312 level, has been support here back in July 7th, and support at July 9th, and then now the midterm moving average coinciding 312 did also become a support in that vicinity as well. And even with that, we cultivated higher high today. If I go to line chart, you can see it better. You can see that we can all agree that that high is definitely higher than this high, correct? Right? And that high is higher than this high. So what are we doing? We're continue to cultivate higher lows and higher highs. What does that mean? That means we're an uptrend, right? We talked about this yesterday. Market goes up, make new highs, and when it pulls back to cultivate higher low. In a general sense, that's what the market does. Right, that's what you call an uptrend. So it goes up and down, up and down. So if you're more of a longer term trader, you must learn to embrace these pullbacks without getting panicky, without choking your positions to death and putting your stops too tightly, getting stopped out. If you place your stop right here, you've gotten stopped out and you missed that rally, right? You place stop right here, you've gotten stopped out and you're maybe missing out this rally. So same thing here. If you're going to place your stop here, you missed out, and you missed out that rally. So understanding the overall picture is imperative. Navigating this market here. So overall, the posture. This is something that I said yesterday. Also, yesterday it looked like this, right? this is what it looked like yesterday, right? Long green, long red candle. And he blew right through the support, which was a gap area. Because many times you think, well, the support area should provide support. Not only that, we blew through that support also. That is a prior resistance. That's a pretty significant resistance as well. So not only we blow right through the prior resistance, it blew right through the gap area, right? So with that, there was some dominance in the micro term, dominance from the sellers. And I think that made bears to get excited and bulls to get a little bit jittery, maybe nervous, maybe, you know what I mean, a little bit emotional. And what I said was yesterday going into today, well, going into tomorrow, what I said was going into tomorrow, which is that our posture, overall posture should be bullish, right? Doesn't mean I didn't say, well, tomorrow, yeah, we're going to bounce tomorrow, man. We're just going to bounce. I just know. I can see the future. 100% guaranteed, bro. We're going to bounce tomorrow. Mark my words. That's not what I said because nobody knows. Nobody can see the future. All I'm saying is let's give benefit of the doubt to the buyers. And this is a reason why I did not give it bearish in the short term. Despite the fact that we did see pretty significant selling pressure, I said in the short term, I'm going to give it neutral. I even talked about potentially gapping up. We didn't see a gap up. We actually saw a gap down. I think the gap down helped. I think if it would have been gap up, that might have been continued selling. I think the gap down and then kind of exhaust some of the bears, so short-term bears, and then buyers bring it up, right? So, what I'm going to do now, I'm going to actually move this up here. That's going to be the pivot now, right? So you can see that prior resistance here. We got back up, came down, and we got right back up here. So that's a potential support, 316 early trading hours tomorrow. Right beneath it, I have my short-term moving average there, and then my first level of Fibonacci here. I gave you that Fibonacci level yesterday, and we were kind of hanging around in that level did act as support today, right? We got the midterm moving average right in that vicinity, and my first level of Fibonacci at 313, that's the level where we found support. And so if we see early trading hours of pullback, 316 likely become as potentially a new support, and potentially that short-term moving average there. So in this vicinity here, it's going to be a potential support now going into tomorrow. If we continue higher, that gap still remains open right here. See, some people ask me like, well, I don't see a gap there. Well, think about this way then. If you go to 1 minute chart, you'll see it. But think about this way. You see that? That's where it closed. Okay? It closed the day. Like you don't see like actual visual gap here like this. But this is where the price closed at 323. And the next day, it gapped down to 318 here. So there's gap started from here to here. Price gone up, but it didn't go all the way back up to 323. That's why there's a little gap there. So that little gap gave us that much trouble. You see how that little gap. That's why I kind of said, I think last on the weekend video, don't mess around, don't play around, fill those gaps as quickly as possible. Don't dazzle with it, and so I think buyers really need to get up here and fill this gap quickly. It's such a tiny gap, and I actually didn't expect something because I guess last time when buyers was kind of, buyers were kind of like messing around with it a little bit, and bears really did bring it down. And I guess at the same time, I think really the mostly is a psychological level. I actually think this pullback is mostly psychological. I actually think it's nothing to do with now I look back, I think it really doesn't have to do with the gap because that gap is such a small gap, but I think it's the number of this level. It's that 323, 320 level. I think that's a psychological level of resistance, meaning last time when we fell from there, this market lost what? That was a very fast move, and this market came down how much? Look at that. We fell 8% in just 2 days. 2 trading days, right? Let me see. Let me double check. Actually, not 2 trading days. Maybe about, let's see, 1, 2, about 3, 4 days. 4 days. Let's say 4 days of trading days. So 4 days trading days, market corrected 8%, right? And so I think that was that level kind of spooked many investors, right? Back in kind of early June here, this move. And I think when we got back up and broke out, I think a lot of people, again, that's the overhead resistance, overhead supply. A lot of people are maybe taking some profits. And because of they remember what happened, they're a little bit, because in this vicinity, they're a little bit jittery. They're a little bit nervous because of what happened last time. I think it was that psychological level. I don't really think it's a huge deal with that little gap, but it was that psychological resistance level, right? And that's where we saw that abrupt sell-off and blew through all the supports, and how quickly sentiment changes the next day. Isn't that crazy? How quickly, I mean, it seemed as though things were bad, right? Yesterday, but today it doesn't seem as bad, right? And that's not the right approach. If on a down day, you think everything seems like it's gonna crash, and on an up day, you think everything's gonna go higher and never pull back, that's not looking at things objectively. You're looking at things emotionally, right? That's why yesterday, it should have never been like a crazy, like, oh my God, what's gonna happen? Is this the end here? Are we gonna finally see the top? You know, and I think most people kind of really concerned about the NASDAQ, right? Because the NASDAQ is extended. Like I said before, I've been saying it for weeks now, that NASDAQ could pull back. We could see the money rotation occurring where NASDAQ could correct, you know, through time, see consolidation. Even today, you could see the Dow is up about 2%. You know, Russell 2000 is, you know, getting there, while the NASDAQ is pretty much red or flat. So we can do that for a while. Like NASDAQ could basically just move sideways, pull back a little bit, and just lag while the other indices to kind of get back up. And that's how this market can continue to stay propped up. Sooner or later, we will see more steep decline like we saw in June, that 8% correction like on the S&P. Sooner or later, we will. But right now, I think it's more of a recovery phase after that 8% correction, right? Bulls absorbed that volatility, right? And then bulls broke out. Little bit of shakeout here, right? Just make sure there's any kind of people chasing up there. Let's quickly punish them. And that was all happened because of a psychological level at 320, because they remember what happened last time. When we hit 320 last time in early June, we saw 8-9% correction very, very abruptly. So people got a little bit scared. And then with that little bit of a pullback, stops were getting taken out, and just quickly little panic occurred. And the next day, people realized, okay, well, we're still on an uptrend. And then we found support in the midterm moving average, some of the key levels we talked about yesterday. And then we're back at it. And today it seems like, oh, what happened yesterday? You know what I mean? And we also talked about yesterday that it was not non-event, right? What we have to focus on is the cultivation, right? We established something. Buyers established something with that move. You can't just say, because we went up and came right back down, we can say, oh my God, that's a non-event. That never happened. That's what a lot of times I hear people say on social media. That's not the right assessment. That's a cultivation. It's not happened. It happened. And with that happening, we cultivated higher highs. You see what I mean? Let's check out that oscillator real quick here. I've added it. I've always had it, but I actually look at multitude of oscillators, but I only wanted to show you one so I would have enough time, because I don't want these videos to go too long. I don't want to analyze 2-3 oscillators, but I put up another oscillator just because my normal oscillator that I look at with you, they're lagging. But this oscillator is a little bit, it's giving us that little head start here, right? But I first want to show you something, because Diamond, which is the Dow Jones Industrial Average ETF, it's been leading the market today, right? And I want you to see what Diamond is doing. Look at that. See, this is what Diamond looks like on that oscillator that we always look at. You've seen this before, right? We've seen it happening right here. Boom, 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 there. And now we're seeing it happening right here, right? Right there. And you can see we're just starting to cross up a little bit. We haven't crossed yet though, but we're starting to a little bit there with that move. Spider looks a little bit different, and Spider is a little bit lagging. So you can see it looks like we still haven't turned up. So I think what happened is, I think what the oscillator is telling us is because there's such a big move up and down. It was such a fast move up and down, right? So, and with that, because these oscillators, you know, they don't move with the price that quickly. Basically, what this oscillator is trying to tell us, so one of the role is to gauge overbought, oversold level, but at the same time, it's also to gauge the momentum, right? Basically, the oscillator tells us that it takes time to build momentum. It takes time to build a trend. We saw very abrupt sell-off after it hit that overbought sentiment. So because we came up very fast, my oscillator here hasn't turned up yet, which means based on this oscillator, we're still kind of in the bearish sentiment. So we have a conflicting information, and sometimes it happens. This is why I got this oscillator tells us, oh, this is already crossed right here. You see that? It has already crossed up. And then the price is already getting above some of the key levels here. So this is the thing, is that sometimes you're gonna have your oscillator kind of getting confused a little bit. This oscillator is a little bit confused, but again, it's because it was a very, very fast fluctuation, going up, coming down, going right back up, right? Again, these oscillators does not cross back up and down that quickly. And that's a good thing for this oscillator, does not cross back up and down. That way we can continue, because market, the price is gonna go up and down crazy, right? This is the reason why we look at the oscillator so that we can gauge, well, okay, we got some crazy shenanigan, but are we still in a bullish momentum? Are we in a bearish momentum? That's why it's a good thing that the oscillator does not cross up and down quickly with the price action. I mean, this oscillator has been pretty much on point last several months, but I think this is the first time. I think since I've been analyzing with you guys with the 65-minute oscillator, this is the first time where I see the price getting up and the oscillator is not getting up here. So I want to show you this oscillator is a little bit faster than this one. It's telling us that we do see a momentum. We got a little bit of conflicting information. And with that information, there's a little bit of bearish connotation going into first couple of hours of trading. Maybe a pullback to retest 316 area, maybe pull back to retest some of these lows or the short-term moving average. We cannot completely rule that out because of this. Obviously, bulls want to continue. If we see continuation to the upside tomorrow, maybe a gap up, continuing to higher first couple hours, you will see this oscillator kind of crossing back up like this tomorrow. So tomorrow morning, I'll come back to you guys, let you guys know. Sometimes we do see something like that. We actually saw that happening here. So it wasn't, you can see, that's why you can be so precise with it. With the levels, you can see right here, this thing actually briefly got below it and then it crossed back up. Later I adjusted like this, but if you want to be very precise with that, you can see that we actually briefly came down. So if we do see continuation to the upside, that would cross back up quickly. So if you're a bear here, you could make this oscillator continue lower because there's some room to the downside. It's not overbought, oversold yet. We got some room here, right? We see that there's some room there to the downside. So bears can still turn this oscillator to come down if we see a gap down or a weakness in the first couple of hours early tomorrow morning. If that's the case, this oscillator will continue lower. And price, that means price can, that means that we still kind of have that selling momentum here. And that's what this is telling us. We still kind of have selling momentum, but we got the price going higher. We got this, my second oscillator going higher. So we just have, we're seeing some discrepancies, and my main oscillator is telling me that, well, there's still a little bit of selling connotation there. We still got a little bit of selling momentum there. So we may see some shenanigan tomorrow morning. But if the bulls really want to see price advancing from this point on, and you want to see this oscillator going higher, we must continue higher. We must see follow through right away tomorrow morning, right? So going into tomorrow, despite we have a little bit of a bearish connotation on this oscillator, but I want to give it bullish. And let's do neutral to bullish. Let's not do full bullish in the short term because of this oscillator. Let's do in the short term, micro term obviously bullish, micro term meaning just today's price action. But in the short term of things, you know, last several days or the week or 5 days, let's give it neutral to bullish, right? Yesterday we were neutral in the short term, right? Let's give it, because of some advancement in the price today, let's give it neutral to bullish in the short term. Obviously, midterm bullish, right? And so tomorrow we'll come back and we'll figure things out and see where this oscillator is at. You can always follow me. I've been tweeting out pretty much all day today, you know, giving you guys the levels and the oscillators. So you can follow me at 2K Kim on Twitter and Stock Twitch, and I'll tweet things out as I deem necessary, as I see some development going on. So you guys enjoy your evening, and good luck trading tomorrow.